Welcome to My Business Matters, the Michigan Chamber Podcast.
Welcome to today's podcast. I'm Jim Holcomb. I'm president and CEO for the Michigan Chamber and today's podcast host. Today we're going to be discussing Michigan's new state-federal tax split, officially known as decoupling, and what it means for employers and our Great Lakes state. Don't really know what decoupling means? Well, you're listening to the perfect podcast. We have a wonderful panel today to help us unpack this topic. We have Sean Cook. He's a partner and tax attorney at Warner Norcross Judd. He also spent nearly a decade as a CPA. We have Theile. She's the vice president and COO, as well as being the director of public policy at the Anderson Economic Group. They're one of the state's leading economic market research firms. And the Michigan Chamber's very own Randy Gross. He is our senior director of legislative affairs and associate general counsel. All, thanks for joining. Appreciate it.
Good morning.
Good morning. Thank you, Jim.
Well, I think, you hear the word decoupling, and a lot of people are like, well, what the heck does that mean? So, Randy, let's start with that. Plain English, what is decoupling?
Sure. I think decoupling is a weird word. Every time I hear it, I think of something on TMZ, and then I'm watching some type of news story. But the simplest explanation is it's a separation of policy. So in this case, it's a separation of the state's tax policy from the federal tax policy, whereas historically Michigan has absorbed essentially the state tax policy. You start with your think of it in your personal income tax returns. You do your income tax at your federal level, you get your adjusted gross income, and then you put that down onto your state return, and then you go through the state income tax return. When we decoupled, we took out a number of the federal provisions that are going to now require you to do two separate returns where you're not going to be able to utilize that one number when you're calculating your tax liability at both the state and federal level, requiring an additional level of compliance and complexity in doing your tax returns. So
it started off, if I'm understanding correctly, the federal return was your starting point. That number you just transitioned over to your state return, and that was how you kicked off doing your computations of filing.
Exactly.
And so when we decouple, now there are provisions that we'll talk about later in this podcast that Michigan taxpayers could take advantage of, but now they can't.
That's correct, 100%.
Okay. Sean, as we talk about this and really just start kicking it off, we hear a lot about the complexity and administrative burdens due to the changes that Randy's just started to outline. What's your take on that?
Well, absolutely. I mean, all business organizations are going to have to sort of adjust for this, adjust their systems. I can imagine there's a lot of tax managers and CPAs that are sort of scrambling now and to figure out how do they, adjust their systems to account for this. And it's a short-term and it's a long-term issue. So the thing with Michigan, though, we have had quote-unquote decoupling in our history. So this is not like the first time this has ever happened. We actually have quote-unquote decoupled from the federal government many times in our tax system, but this one did sort of come quickly and maybe as a little bit of surprise to people.
Randy, was there this was a legislative action in our last budget kind of debate. Was there a lot of discussion around this?
So there were some hints around it, but I think generally speaking, most did not think this was going to happen because the fact that, we are a manufacturing state and a number of these federal tax reforms that we decoupled from were to incentivize domestic and reshoring of manufacturing and growth in general. So though there was some hints that it was going to happen, a lot of people thought, cooler heads would prevail and recognize the economic benefits of this. What I will say is when the legislation actually was introduced, it was really quick. So the bill came in, and within 24 hours, it had passed the first chamber, and then shortly thereafter, there's a constitutional requirement on how long it has to sit in another chamber. But within the week and hammering out the budget deal, they had passed the final legislation.
Is it fair to categorize this as policymakers looked for a revenue stream and saw this as a revenue stream, and that's why they did this?
I think 100% that's a fair way to categorize it.
Tyler, you're an economic expert in this. Can you help us put maybe some numbers to this and how you look at it from an economic analyst perspective?
Sure. I mean, we're one of 18 states that are considered static states, so we have to take action to assume federal tax guidelines. And sometimes that action is more predictable than this time around. The only other state I'm aware of that's decoupled on these specific items is Rhode Island. Unfortunately, they're not a peer state or a competitor state for us at this point. And so the loss of particularly the R&D investment area in the current year or the year after when you're filing your taxes on the investment is a big blow to Michigan. We know that we have to be racing faster than our peers to remain an automotive and aerospace and high-tech manufacturing hub, and we need to retain the businesses that would use this credit, and we want to attract new business that would use this credit.
Yeah, Todd, can you expand a little bit on the R&D tax credit, maybe how that works or how a business is going to be harmed by this decoupling, or what changes they're looking at?
Sure. So we know that it takes roughly $100 million in innovation investment to get one new startup off the ground and running in Michigan. And, we have a great talent pipeline. We have great R1 research universities, and we do have great manufacturers here. But some of our greatest were established 100, maybe even nearly 200 years ago, and they have to keep innovating. They have to keep investing to stay on top of this. And what we're saying to them is that your investment is not valuable enough to give you a tax break on it. Maybe you should go somewhere else and use some other state's talent.
That's the most frustrating
really
part.
Challenging.
Yeah, that is challenging and frustrating as we're in the race for the jobs of today and careers of tomorrow, and you want to support free enterprise and entrepreneurs and really be that active economic hub where there's a lot of economic vitality of the state, and it seems like this is just counterproductive.
Jim, I'd like to add in, the R&D was absolutely a big one too, but there were several other provisions within this decoupling action that were impactful, kind of across sector. And
Sure,
I know R&D has been used as one of the poster childs for this, but there were things that, what's called like Section 179, which expanded access for small businesses to write off some expenses. There were things that were under what's called the new 168N section that was going to allow you to expedite your write-offs for constructing new plant, putting steel in the ground, expanding your facility, building a new manufacturing, and we've taken that all away from Michigan businesses too in this process. So they can't benefit on their state tax returns for those items as well. So this hit large and small businesses alike. It was impactful.
So it's not just big business. I know some of the rhetoric I heard around the legislative debate with policymakers is, well, this is just big business. We help them out all the time, and we need to make sure, the state has dollars in our budget. But what you're saying, Randy, is it really does trickle down and hits, I'm assuming all industries and all sizes.
Yes, absolutely.
Yeah, it's something like 90% of people are actually employed by a, quote, small business.
Exactly. They certainly are integral to, you want to, we talk about the Michigan Chamber, you want a strong economic ecosystem. You've got to be from top to bottom through all 83 counties, all industries. We're trying to make sure that everybody can thrive and not just survive. We want people to be moving here. And that's one of my big concerns is what's this do to our, our economic development plans, regardless of who's doing the action and what they're doing, whether it's state, local. How are we going to be looked upon when you can go across the line to another state and maybe have a more favorable tax situation? That's real dollars.
Yeah, you're 100% correct, Jim. I'm not sure how to answer that question yet. I think we're still trying to figure out what those next steps will be and how businesses are going to be able to react and incorporate these changes.
Sean, what are you hearing from your clients, whether it's tax planning, tax preparation, legal? Is there a way for them to deal with this productively, or what type of questions are you getting from people across the state?
Well, there's sort of short-term and long-term questions. And, the short-term questions is, what do I do now? How does this impact me in 2025? And, in terms of, in a very short term, estimated tax payments, what do I need to do to make sure that I'm not going to get penalized for not making my estimated tax payments? And this is at, the corporate level and also the individuals for flow-through entity businesses. So it is pretty broad, and the number of taxpayers this is actually going to impact. So that's in the short term. And in the more longer term or medium term is, okay, we're planning this project. We're sort of charting out the expenses, how much things are going to cost, and how this project is going to work, and sort of budgeting for that. And now we have this little issue here where there's an additional cost that's going to come in. We're not going to get the full benefit of, as Randy indicated, the write-offs, which are we've become pretty good used to these write-offs of capital expenditures. Mm-hmm. So they're looking at projects now. So now you got to adjust the project budgets. You also have to sort of take a look at your capital expenditure budgets and decide, is this, 4 to 6% additional cost going to change the dynamic on there? So that's what some of the tax, the clients and other people are talking about is, the short term, what do we got to do today, and sort of the medium and long term, how is this going to impact capital expenditure budgets, project budgets, and just general budgets in overall for the business.
And this takes effect immediately with this tax year, next tax year. When does this start impacting people?
Now, today, in 2025.
And I would assume if we're talking about the impact on financials as the business is trying to go out, that's probably going to impact lending, whether the lending costs or maybe how viable and how many options there are to gain lending. If your pro forma financials are changing and how a project is going to be funded, I would assume there's a negative impact to that as well.
Yeah, and one of the other adjustments is if you are a business, and this is a larger business issue predominantly, but if you're a business and you're borrowing money, there's a interest expense component that a limitation on your deduction for interest expense. Mm-hmm. So yes, it's the lending and the additional costs that are built into a project, but also how are you going to be able to deduct that interest? Am I going to be further limited on the deduction of interest for Michigan tax purposes? And that's that's layering on top of the cost for not being able to deduct my CapEx and saving money from the on my tax return.
Yeah, and maybe to circle on that a little bit, and Sean, correct me if I'm wrong, but I believe he's referencing we decoupled from a section that was called 163J, which changed how EBITDA was calculated, and it was going to allow us to Michigan businesses to utilize kind of the it's been for about 3 years, there's been a change in this, but prior to 2022, it was how EBITDA had always been calculated and writing off your interest, and now we're not going to be able to utilize that in Michigan as well.
Randy, can we go back a little bit to the beginning? Just how did we get here? What we talked about, we're decoupling the state returns from the federal returns. Was there a recent action at the federal level that made all this possible? And how did we get to this point where Michigan said, hey, we want to
Sure. I mean, so starting, real simply at the federal level, this was part of the One Big Beautiful Act and the various tax reforms that happened at the federal level. So that happened in July. Consequence of those actions were there were substantial reductions in business taxes and in personal taxes. There was a lot of tax reform that happened in that bill, negotiated throughout the whole process. Once that passed through, states began evaluating, well, what's the impact now to us as a state? And Department of Treasury and I believe House Fiscal came up with a number that identified roughly a $600 million impact to revenue in the state, because these were now going to be reductions in taxes, right? That was the whole plan of this, to incentivize investment. As budget negotiations came through, there was a lot of priorities people wanted to identify. Some were arguing for additional revenue, some were arguing for more cuts. And this was one of those pieces that was identified as a potential revenue source. And that's when it went through this process we talked about earlier, where a bill was dropped and went through. And unfortunately, I think it was viewed as the mechanism of least resistance, or however you want to term that. I'm not sure if that's the right term.
Well, I think we kind of have a populist structure out there, and I think anytime you go out and tell people, hey, we're going to just tax business, we aren't going to get to people. But as I understand it, it does get to people, especially your small companies that are pass-through entities, as Tyler referenced earlier. That is money out of their pocket.
Yeah, 100%. I mean, you think of the local service station, right? They're probably incorporated as a flow-through entity or an LLC or something like that. They're going to feel the impacts of this too. I can't go buy that new cooler I wanted to do because now it doesn't make sense for me to do it because now my write-off period is way too long and I can't justify that investment in that short of a term.
I've heard from some of our members, is it fair to characterize this that the state or the federal government gave businesses a tax cut and we were on that train, and then the state came and said, no, we're going to take some of that money back?
Yeah, so the simple way I heard it explained actually from Wendy within our office was, hey, the federal government gave me $20, they gave me 2 10s, and the state looked at it and they're like, yeah, but we want one of those 10s back. Yeah. And they just took that $10 back to make sure that they had their share.
That's a good vision. Tyler, I don't know if you've done any modeling or have you seen any credible modeling. Do we know what the cost is? I know we said there's R&D credits and bonus depreciation. There's several elements to this. Do we know what the cost is, or even a guess, to Michigan taxpayers?
We have not fully analyzed this. We'd love to work with someone and do that. Yep. Wink, wink. But all kidding aside, the cost is the lack of growth. Michigan is in an area where we have encountered some key growth among economic indicators, like personal income, for example. But by many metrics, due to lack of population growth, we are racing just to keep up or maintain status quo on certain indicators. Mm-hmm. And so this could harm us in that way because the costs to businesses are obviously, for our CPAs, extra time, extra work. Room for error. I'm probably going to spend a couple extra hours than I would have working with my CPA to file taxes for the business that I operate. Mm-hmm. And it's the costs of businesses that don't locate or expand in Michigan right now because of the unique situation. Will this be permanent? Will a fix be rolled out? If a fix is rolled out, what's the uncertainty there? If we get nowhere, we're just doing this like two separate liabilities for a long time. The costs are mostly in uncertainty. If you were to look at net new economic impact versus net new fiscal, that one's hard because obviously on the fiscal side, this generates revenue or maintains a revenue stream prior to July. But on the economic side, it's a little more long-term and nuanced than that.
Yeah, I would even add, we know the next 5-year impact. The estimates out there, widely accepted by all the business community is this is going to be about a little over a $2 billion tax increase on Michigan businesses. But for the passage of the legislation, they would have saw the reduction in their taxes. So, from a hard numbered aspect, we can point to that over the next 5 years. They decoupled. This isn't something.
Is this a permanent or temporary decoupling?
That's what I was going to get to. This is something that is going on indefinitely until somebody takes action, either to mirror us back up and match us, couple us, I guess, if you will, back up with the federal reforms, or sunsets the bill or something along those lines, which is what we've advocated for. There is some smoothing in the sense that smoothing's the wrong term. There is some reduction. The first few years, the impact is more significant than it is later on because things start, there's a loss of aspects of the retroactivity in the first couple of years. But even post 5 years, estimates are based on House Fiscal's numbers looking at it. It's still a $300 million a year additional in taxes that the business community will be paying that they wouldn't have but for this legislation. Yeah,
I can tell you I've recently been in contact with colleagues across the country, other state chambers, and they see it as a marketing opportunity for them. All three of you have kind of alluded to the point that it makes us less competitive possibly. They're absolutely seeing that, and that's going to be part of their pitch. Come to our state because we're coupled with the federal return. Sean, were you going to hop in there?
I was going to hop in there a little bit. You might say, some of the defenders might say, all of these deductions are what we call timing differences in the tax world, meaning that, you're just deferring, you're going to get your write-offs, but it might be over a longer period of time. And if you sell the asset, you're going to pay less tax on that gain. And theoretically, that's true for the most case, but practically, it's hard to tell a business that, pay more taxes today, you'll recoup them in the future. Well, there's no guarantee because a lot of things change, laws can change, situations can change. So not every business will recoup that money later on. So, but you'll hear that argument that these are merely timing differences on when you can take the deduction. We're not raising the tax rate. We're not saying you can't take these deductions. We're just telling you when you can take them.
Well, to your point
not today.
To your point about things changing, 3 months ago, all these businesses thought they were taking positive tax steps because of what the One Big Beautiful Bill did, and somebody changed it. So, like you said, theoretically, but I'm not sure who can answer this best. I'd heard from one of our members that it also changes because some of the deductions, it was all front-loaded on maybe research and development or buying equipment or something where things were front-loaded, and now they're not. You may be on a longer depreciation schedule or many more years of paying it, so you have a lost opportunity cost of those dollars you were going to have this fiscal year or next fiscal year to reinvest in your business, which are now taken off the balance sheet.
Certainly. I've got a great example.
Go ahead.
Go ahead, Tyler.
So in Owasso, Michigan, there's fabrication for pontoon boats. And they recently invented robots that bend the steel to make the pontoons. And it alleviated a huge bottleneck, increases their production, increases significantly how many people they can employ because of that increased production. If you take away a business's incentive to purchase that robot in the given year and tell them their deduction is 30 years out, you might take away all of that economic activity that they were excited about spurring in that given year.
Yeah, we did hear from one member who was in the road building industry, actually, who was gearing up to buy a piece of equipment, who said, no, we won't. And that's just negative. He says, I'll take those assets and redeploy them in other states because a lot of our road builders do work in other states, which is frustrating again. I think we all understand the legislators have a tough job. You have to have a balanced budget. There are a lot of demands for the revenue that comes in, but I think we look at this and just say, was this really the best option? And Randy, there was alluded to earlier, a fix. Is there any discussion that this may come back up, whether it's this session or another session, where we'll have a full policy debate on was this a good thing to do or not?
We are continuing those discussions with various lawmakers to educate them a little more on the importance we think of fixing this issue. And I don't know that a fix can come up this session just with the way the political makeup is within the state.
Sure.
But I think there will be opportunities, hopefully, to address this issue, and we're going to continue to educate and identify people that want to take on this issue for us.
And I think that's the most important part that we always talk about. Obviously, people have different opinions on policy issues. We always just want to make sure there's a full, open, fair debate. We need a lot of transparency and just making sure that everybody has a voice heard. We elect our legislators and policymakers at all levels to make decisions. We just want to make sure that everyone has the full knowledge and information, so it's an informed decision which they make. We're starting to come to the close of this podcast, but I wanted to go around the horn. We'll start with Randy here because I can look at him across the table. And just anything that we haven't touched on that you think would be helpful for our listeners to hear.
The thing I would point on is it's important to engage. When Jim, you touched on this earlier, that sometimes businesses is viewed as this faceless, nameless entity, and people don't identify it. And I think that's why it's important for the business community to continue to engage, have your voices heard, reach out to your local elected officials, make sure they know you're there, make sure they know what you care about. And that, and follow up. I mean, again, they may not always agree with you and you may not always agree with them, but having that line of communication sometimes solves issues and at least maybe identify something that could be harmful and makes it less harmful or more manageable, or there, other things they may consider that they didn't know before because they just didn't have the information.
Yeah. Tyler, final thoughts?
Yeah, I would second some of what Randy said. I think often there are good intentions with grassroots efforts or legislative changes, and folks just may not understand how everything from nuanced language to full policies affects business owners and all of our ability to thrive and grow as Michiganders. I do think that a fix comes for this eventually. I think timing and pressure to balance the budget were the main factors here, and I don't see an obvious solution to the, quote, hole that would have been created. So I hope that the claims that this is temporary are in earnest.
Sean?
Yeah, two things. I think what they did here is going to sort of be very difficult and be very complex to undo in the future. And so we might have this period of time where it's sort of like, well, the rules from 25 through 26 were this, and then you got another set of rules. It just makes everything more complex and unfair to the taxpayers, if you will. But I would just tell all taxpayers, all business owners out there, they need to talk to their tax managers, or if they rely on their CPAs, you need to have that conversation. I know it's before year-end, you're probably planning to do year-end planning. Well, you got to put this on the agenda item now, too, and probably spend a little more time figuring out how this is going to impact you, what does it mean for the future, and changing your accounting systems, your tax information systems to make sure that you capture the information necessary to comply.
Yeah, I want to agree, echo something you've all said. Going forward, I think it is going to be tough to change. I've been in town long enough and worked on policy for 30 years here that if we try to change it in the future, the same people who told us this isn't a tax increase are going to come and say, well, you just blew a hole in the budget. If you're going to recouple, you're going to take all that dollars off. And so you're taking away state revenue. We're going to need to raise taxes somewhere else. And, I just find that that argument's going to be tough to overcome. But, well, I really want to thank our panel. It's a complicated topic, but something that we believe listeners wanted and needed to have information on. So a big thank you to Sean Cook, a partner and tax attorney at Warner Norcross Judd, one of the premier law firms here in Michigan. Tyler Theile, she's the vice president and CEO, director of public policy at the Anderson Economic Group, one of the state's leading economic and market research firms. We can't recommend them highly enough. And our own Randy Gross from the Michigan Chamber. He's our senior director of legislative affairs and general counsel. Thanks to all of you for listening. Please subscribe, like our podcast for easy notifications. And until next time, stay informed. As we talked about here, stay engaged. And if you need any information, go to michamber.com.